But then clearly there has been demand for 5 years now, and I think ongoing, for a levered kind of pure play Bitcoin entity. And then I think the main questions to ask are how do you value that? I generally err toward conservative. And two, how do you manage the risk so you don't have a very large blow up, especially among the larger ones in the market? And I think there is a market for ones with cash flows. They don't have to necessarily have growing cash flows. And really, at that point, Bitcoin competes with other uses of capital, like buying back shares, paying dividends, paying down debt. They can employ that as one of their potential strategies for what to do with their excess earnings over what they require for reinvestment.
Hey guys, welcome to Everyday Finance. Bitcoin is just below $120,000, just close to its all-time high of $123,000. The asset has been going up since it broke through big resistance earlier this month. Technical indicators showed that it has room for more gains. It's still in an ascending range that began in April on a number of charts, which suggests that the bullish move could go all the way to $125,000. Still, small drops along the way show that people are taking profits as the rise goes on. Even when there are big changes, the market stays active, which shows that people are still interested. New rules let retirement accounts use cryptocurrency, which brought in new money and helped the market rise. Market watchers think Bitcoin's value could go up even more by the end of the year. Some even predict it will reach $130,000 or even higher. Different players are coming up with new ways to get exposure as liquidity grows. Treasury-style firms stand out because they use debt better than most others to grow their places. Some investors like having direct control, but others like these companies because they hold Bitcoin and have ongoing cash flow and strategic management, which makes them more stable during cycles. Lyn Alden recently gave a talk about how these kinds of companies can balance Bitcoin plans with other parts of their business. This way, investors can get exposure within a corporate structure that gives them access to markets, management knowledge, and tools that individual holders may not have. Watch the whole interview with Lyn Alden to get a bigger picture. Also, don't forget to like, follow, and turn on notifications for more content.
Sure. So I've been covering strategy since they started their Bitcoin accumulation treasury strategy in August 2020. I've also been long since then. It's been a small part of my analysis compared to everything else I do. So I focus a lot more on Bitcoin broadly than I do on strategy, MicroStrategy, as well as broader equities and macro, as many people know. And I've, over time, the thesis has changed a little bit. I mean, we kind of see the evolution of it over time. So first I was like, okay, it makes sense. There's finally a stock that will own some Bitcoin. So in certain types of portfolios, you can access that. Then they began levering it, which I found interesting. As they kind of did, I think they're either second or their third tranche of leverage. I was like, maybe it's getting a little bit too levered I'm a pretty conservative investor. But then they started issuing equity because they had a pretty high MNAV at the time. And I was like, okay, this is actually de-risking it to some extent. They're adding more on their equity side. And I increasingly saw that they're navigating this well. I think the executive team has been strong. So my thesis throughout the 2022 bear market was that they would get through it. They did. And since then, we've kind of seen them shift more from convertibles toward preferred. I continue to be long. For people that follow my research service, I tend to trim the exposure when it hits kind of euphoric levels, like particularly high MNAVs, and everyone on Twitter X is talking about it. But I've still stayed with a position to let the house money ride. And I think broadly, treasury companies make some degree of sense because if you have an appreciating asset, and Pierre Richard wrote about this back in 2014, the idea of a speculative attack, and Bitcoin was tiny back then, and he kind of pointed that as it gets bigger, it's inevitable that we'll see some pools of capital find ways wherever they can to short fiat currency and be long Bitcoin. I think the thing about treasury companies is they can do it with better types of leverage than most other pools of capital have access to, which is interesting and gives them an edge. And I think that by the end of this cycle, we probably will see some treasury companies fail. I think there will be low quality ones that get over their skis. So anytime you link leverage with something, you're increasing the risk. I do think the highest quality ones are valid. And this particular discussion happened. So I went on Strategy's earnings call as one of their analysts, and I actually asked the bearish question of the group, which is basically asking about stress testing during the next bear market. Like what kind of bear market are they kind of modeling or thinking about as they design their capital structure? And they provided their answers. And then also I generally agreed with that their new preferred, which they're pretty excited about, is I think it's hitting a sweet spot that the market wants. So I expect it to be successful. And in one of my two threads, Andy and I went back a little bit and forth a little bit because I'm generally in the cautiously optimistic camp around these treasury strategies. Depends on the specific company in question and the quality of the management team and everything else. Whereas he understandably has a more critical view, which I think is healthy. I'm certainly critical in some aspects of some of these businesses. And that was kind of the genesis, I think, of this conversation. I would say that unlike an ETF, MicroStrategy and other treasury companies that are operated well tend to increase their Bitcoin per share through these strategies, through this kind of debt and equity issuance strategy. And so you're paying a premium over the Bitcoin they have, but then you're also expecting this per share Bitcoin to increase. Now, there's different ratios that analysts have come to use, basically trying to figure out how much of an MNAV to apply based on forward, how much they expect Bitcoin increase per share. I've actually raised the concern that the problem with that is it's recursive because the higher their MNAV is, the faster they can increase their Bitcoin per share. And so that flywheel is really good on the way up, but can also just unravel very quickly when sentiment changes. It's different than, say, evaluating a company based on cash flows from operating a pipeline business or something. And so while there's merit in that analysis, it's a new form of analysis and it's inherently just challenging. My general view has been that I don't know what the right MNAV is. It certainly depends on the company. For example, Metaplanet is smaller, is in a jurisdiction where there's a really big tax arbitrage, which is different than the United States. So that they're actually tax advantaged there. And they started from a smaller base, so they've had very high MNAV and have grown very quickly. It's come down more recently. So I think that MNAV is somewhat context dependent. Partially based on how much you expect them to be able to kind of arbitrage this. Generally speaking, as they get bigger, we should expect the MNAV to gradually compress because trees don't grow to the sky. Now they can continue growing. It's just that after a while, that MNAV generally starts to compress. That's so far what we've seen in the market. But I do think that an MNAV above 1 makes sense when you can attach this longer duration debt to Bitcoin and therefore get through periods of cyclicality, at least if managed well and conservatively, compared to the way that hedge funds lever, the way that retail investors might lever. And so I think it's worthy of a premium. I would like to see eventually more cash flow generating businesses have Bitcoin on their balance sheet. The kind of history of this space, so MicroStrategy did the approach. They actually then ran a number of conferences called Bitcoin for Corporations, trying to get other corporations to do it. We saw Tesla dabble in it. Block got in to some extent. We didn't really see a lot of other companies with existing operations decide to add Bitcoin. Instead, in this cycle, we've seen a number of companies that kind of spun up to do the strategy, as well as increasingly around the margin, some existing companies do it. So I think there is a bigger market for companies that just use Bitcoin as a treasury asset while also having separate cash flows. But then clearly there has been demand for 5 years now, and I think ongoing, for a levered kind of pure play Bitcoin entity. And then I think the main questions to ask are how do you value that? I generally err toward conservative. And two, how do you manage the risk so you don't have a very large blow up, especially among the larger ones in the market?
Some Bitcoin-focused finance firms may look good because they hold an asset that is going up in value, but adding leverage raises risk and makes sure that not all of them will make it through. In ways that are different from ETFs, the strongest players with strong leadership teams raise money through both debt and stock. This makes Bitcoin per share go up. They can buy more Bitcoin when the price goes up, but if people's feelings change, the circle can quickly go against them. To evaluate these businesses, you need to look at them in new ways. One way is to look at how much Bitcoin they expect to grow each share. This can change based on the size, structure, and tax situation of the business. Larger companies tend to see their value premiums drop over time as they grow. More and more people are interested in companies that hold Bitcoin and have a steady flow of cash. Companies that don't make money but use Bitcoin are often seen as higher risk. Overall, Bitcoin is still a great investment for people who are sure it will go up in value over time. If you want to know more, let's go back to the Lyn Alden conversation and watch some more highlights.
So there are somewhat different types of zombie companies. In some ways, the perfect candidate to do this is one that's like a value stock that's cash flow positive, but doesn't really have any growth prospects to add Bitcoin. That's really interesting. And we haven't really seen a lot of that. Truly zombie companies that have like no cash flows, that's a much harder sell. Generally speaking, so far we've seen that the market certainly does not like uh, unprofitable companies, companies that are losing money to adopt a strategy because they view that as a distraction and a risk versus their kind of Bitcoin approach. So I certainly think it makes sense for companies to at least have your profitability like neutral, and I think there is a market for ones with cash flows. They don't have to necessarily have growing cash flows. And really, at that point, Bitcoin competes with other uses of capital like buying back shares, paying dividends, paying down debt. They can employ that as one of their potential strategies for what to do with their excess earnings over what they require for reinvestment. Sure. I mean, there's a number of points there. One of the earliest ones was why Bitcoin? Why buy Bitcoin with cash? Historically, the answer is because it's the best performing thing you could buy with your cash, pretty much. And then the thesis going forward is that it's going to
100%.
continue to be either the best or one of the best things you can do with your cash, especially that it's not a security. So there's with U.S. stocks, there's kind of a limit on how much securities you can have in your asset mix. It doesn't apply to Bitcoin, which is a digital commodity. And so the combination of high expected returns based on those who, generally speaking, those at strategy and those who invest in strategy are bullish on Bitcoin. So I certainly wouldn't recommend a Bitcoin treasury strategy holding for those who just aren't particularly high conviction long-term bulls on the
Do you
asset.
think there's a valid reason to have high expected returns on Bitcoin based on historical returns?
Not just on historical returns. I mean, I employ a number of analysis methods to determine what I expect Bitcoin to do. I still think that the total addressable market of what Bitcoin can address is much larger than the current size. From in my expectation over the next 5-10 years, I do expect Bitcoin to still have high returns. Now, not the returns that when you go from $1 billion asset to $1 trillion asset, but I certainly think it can 5x and 10x from here, and we'll see how the numbers shake out in the years ahead. And it's also the risk situation is different than before. So when Bitcoin was tiny, it didn't even have the liquidity for like a corporation to buy it. It didn't have the regulatory clarity in many cases either. And so now that the tax treatment of it has improved, regulatory clarity has improved, and it's a big and liquid enough asset, the expected forward returns are not as explosively high by most analysis methods than they used to be. But the probability of
Right.
beating. I think the main thing is that Bitcoin's the first asset that can actually compete with equities long term in returns. And so prior to this, when corporations had excess capital, they generally decapitalized themselves. They would give it back to shareholders. They would pay it in dividends. They would pay it in buybacks. They would sometimes make acquisitions for the sake of acquisitions because they don't know what else to do with the money. That's often a criticism that especially some tech companies tend to do. And one of the downsides is that makes the company more vulnerable in the future if they don't have something good to save with. Kind of like how households want to save for unplanned things in the future. Generally speaking, corporations want to save for unplanned things in the future. And there's just not been a great vehicle for that. Even gold, because gold over the long arc of time underperforms high quality equities. It's hard to justify holding a lot of it on your balance sheet longer term if you're a company that's trying to be in the the top third of the S&P 500 returns or something like that. Well, I think in many cases you shouldn't. And when companies adopt the strategy, many of them don't get very high MNAVs because the market says, well, who are you? Right? So they look at strategy and they say, well, these people have been doing it for years now. They look at, say, Metaplanet, and they know the people running that. I mean, I know the people running that, and they think that, okay, I'll trust those people to manage this well. So it's certainly a company by company basis. And some of these companies have hired Bitcoin analysts, Bitcoin experts in various capacities to help them do the strategy, and then the market assesses, do they think they have the right people on board to help that company with the strategy? But basically, the answer is one, in the near term, there's an arbitrage. The market likes it. But two, longer term, as Bitcoin kind of grows and becomes less volatile, but still has the absolute scarcity aspect to it, which is desirable, it's one of the few assets that I think there's a reasonable case it can be made that it is able to keep up with equities over a pretty long span of time, if not outperform equities. And therefore, if a company doesn't want to fully decapitalize itself, it doesn't want to say, okay, we're going to take all of our excess capital above what we need for working capital and give it back to shareholders. We want to plan, for a pandemic lockdown or a big new competitor comes to our market. We need to make major capex to change or pivot our business. They want to have something that they can hold for 5-10 years as part of their asset mix. And I think Bitcoin brings that in a way that other assets haven't.
Lyn Alden stressed that Bitcoin's high return potential isn't just a result of how well it is done in the past, but also of the fact that its total target market is still growing. She thinks that Bitcoin could make big gains over the next 5 to 10 years, maybe 5x to 10x growth, but not as quickly as it did when it went from being worth $1 billion to being worth $1 trillion. Bitcoin now has a different risk profile, less high upside, but still very appealing. This is because it is more liquid, regulations are clearer, and it is taxed better. She said Bitcoin is special because it is the first product that can really compete with stocks in terms of long-term returns. Companies usually give away extra cash through bonuses or buybacks, which can leave them open to losses during economic downturns. Bitcoin, on the other hand, gives businesses a long-term reserve choice that gold and other assets haven't, so they can save strategically for growth or crises. Still, she said that companies that use Bitcoin strategies don't always win strong market trust unless they have experienced professionals running the show. Companies like Metaplanet with proven teams tend to inspire more trust. Alden also said that bank companies might do better than buying Bitcoin directly because they can use capital markets and conservative leverage. And because of this, buyers, who can't hold Bitcoin directly or through ETFs but still want exposure like them. Businesses don't just hold Bitcoin as an investment. It's a smart way to protect cash, help growth, and even help keep top executives. In the end, she thinks Bitcoin can change things for both individual investors and businesses. This makes me wonder, will Bitcoin treasury firms continue to do better than regular stocks? Or is direct ownership still the better bet?